Hello and welcome to Morningstar. I'm Emma Wall and I'm joined today by Richard Buxton, Head of UK Equities for Old Mutual Global Investors. Hello, Richard.
Hi.
So we've just heard from you at the Morningstar Investment Conference in London that monetary stimulus no longer works. What do you mean by that?
Well, I genuinely think that this year we've crossed the Rubicon. I think that the move by the BOJ and the ECB into negative rates or further negative rates has just crushed bond yields. And as a result, it's undermined confidence in the financial sector. So you've seen, global bank and life insurance company shares fall 10 to 30% this year, as it's undermining their profitability, investors' belief in the sustainability of their profits and yields. So this is not going to be conducive to creating more lending. So I think, we actually need slightly higher bond yields and gently rising interest rates. If the world needs more stimulus, it can't come from the monetary side. Either you've got to do big fiscal stimulus, which the Japanese are advocating, or you do end up with a helicopter money situation. Read Ben Bernanke's blog. Have a money-financed fiscal program if you really think that the world is so bad that it needs more stimulus. Now, I'm not convinced it does, but what I am convinced is that monetary policy is no longer helpful, it is counterproductive.
And you say you're not convinced that the world needs monetary policy, but there has been, in the first quarter of this year, a lot of negativity. There's been some suggestion that we're going to enter another global recession. Part of that is due to the fact that the UK has actually had slower growth, haven't we?
Yes, we are a little bit slower. Funnily enough, the government ensured that we were at the peak of our growth in time for the election last year, and they have raised taxes, so it is a little bit softer, but it's okay. It's 1.5% growth, not 2.5%. The US is the concern that there the data does look very late cycle. It does feel as though profits are rolling over, that employment's full, you've got a bit of wage inflation. Europe, the data's actually fine. And then there's the perpetual concern about China, hard landing, etc. So for me, it's still a mixed picture. There's some clouds on the horizon without doubt. But I'm not completely convinced it's so bad that we need massive new stimulus.
Of course, then just looking at the UK, you mentioned there that we have had slightly slower than expected growth, although it is still positive. One of the things that is invariably dragging that growth down is the threat of Brexit. Do you think we will end up leaving the EU?
Absolutely not. I've been firm in my views for ages. You're right, it has contributed to the slowdown, though I think it was happening anyway. But no, I think the British electorate are inherently conservative with a small c. They don't vote for radical change unless the country really is in a crisis. In 1979, there was a sense of that. There is no sense of crisis today. So I think that when push comes to shove, the bookies will be proved right. It's still 2-1 on that we stay in, and we can then move on.
And move on to slightly higher growth, we expect?
There will be, I think, a little bit of a rebound in terms of investment and spending and activity. I think things will be second half loaded for the UK.
Richard, thank you very much.
Thank you.
This is Emma Wall for Morningstar. Thank you for watching.